Hi, and welcome to Homes and Loans. Today is Friday, June 13th, and I'm here with my trusted mortgage partner, Eric Eshko with Neo Home Loans. I'm here to give you the latest news on mortgages and the local market as well as the national market. So today I want to start off by saying NAR's top economist, Lawrence Young, said there was a little light at the end of the tunnel. But he said that light has flickered out. So existing home sales are at a 16-year low. Sales dropped in April and rates are stuck near the 7%, not the 6.5 that many had predicted. It's just not anecdotal anymore. The top housing economist in the country just confirmed what we've been seeing in Southeast Michigan since May. This market is not recovering. Rather, it is stalling, which we've been talking about the last few weeks. Eric, on the mortgage side of things, is that news in line with what you're seeing on the mortgage side?
Yeah, I mean, as far as mortgage and purchase applications, they are down. You and I kind of talked about it off screen just for a few minutes here. Hopefully, we're seeing a little bit of light that just happened this week. The economic news, it sounds like the US and China came to a framework of agreement on what the tariffs are going to look like back and forth. And we've had the consumer price index came out yesterday. That came in better than expected, showing there really is no freaking inflation in this economy. So hopefully the Fed is going to get off their hands and start lowering these interest rates. It's been good news to the bond market, meaning it's been a good week for rates to slightly start trickling down. Nothing's going to move hugely, but yeah, I agree. I think we have seen a stall over the last month or so, and hopefully this reverses it a little bit. Again, there's just a lot of unknowns out there, and I feel like both home sales and mortgage rates are really hinging on what's going on in the headlines of the news right now, which is all over the place, quite frankly.
Yeah, you and I discussed, I mean, stock market, crypto market, everything's hinging on the news, the headlines,
Yeah.
unfortunately.
Yeah.
And it's a little disheartening, but it is what it is. Uh, our local inventory in Metro Detroit, it's still surging. It's still surging. You're seeing 3,500 to 4,000 new listings every single week. They're just flooding the MLS. And just to give you some context, those numbers have been for quite some time about 1,500 to 2,000 new listings each week. So we're nearly double as far as new listings coming out every week. I mean, these they're rising at a pace that we have not seen since the pre-pandemic era. And that means more competition and way less leverage for sellers. That month supply of inventory, it's just quietly doubling. It's quietly doubling. Early 2023, we were under 1.5 months supply of inventory. Now we're at 2.4, almost at 2.5. That's actually a big deal. That's a 60% increase in just a couple of years. So I do want to mention, I mean, we are still under that 4 month supply inventory, which does indicate a seller's market. So by no means am I saying that we're in a buyer's market right now. I'm simply saying that the trend is moving towards a more neutral market, and we may see that more neutral market as soon as this fall. I mean, unless the demand shoots up because the rates come down. What are your thoughts?
So no, so that's exactly where I was going. Where honestly, for sellers, it's really putting you in this state where maybe it's not, you don't have the super strong position that you've had over the last few years if rates come down. But I think like you said, we're headed towards maybe more of a balanced market. This inventory is increasing over time. That is really rough as far as from a seller's perspective. But if we can get that inventory up to where, it's at least closer to a balanced market. Now, all of a sudden, these rates come down and the demand part of that starts to increase too. We really could come back to more of a healthy real estate market where we have inventory and we have buyers. The problem is we just haven't had both over the last 2 years because rates shoot up. limits the buyers. The sellers market goes to crap as far as people just sitting on their hands, not wanting to buy, or the reverse happens. Rates come down and all of a sudden there's no inventory, right? So hopefully we're coming to that nice equilibrium where it's good for both buyers and sellers. And I mean, if you think about it, it's the same perspective. You might want to sell your house, but the flip side is then you got to go find something else, right? You're not going to live on the street. So really what we're hoping for, you and I have talked about for years, is we got to get back to at least a little semblance of balance. We got to get some inventory in the market. But then once that happens and rates can come down, we can bring all those buyers back in the market. And that's, I mean, that's the goal, right? That's everybody's goal here. It's just when it's really going to come to fruition and a lot of this economic uncertainty around the tariffs, around the debt ceiling, some of these different things, this big, beautiful bill that the administration keeps taunting. We need to see how that plays out. And once that plays out, hopefully by July here, within a few weeks, we got an idea, and that brings a little more stability to them.
Yeah, and I think what most people don't realize, I forget the exact number, but there was a number assigned to it, and I forget who even had the number. It might have been NAR, but they said, what most people don't realize is when someone purchases a home, it's not just the agents and the mortgage company and the title that are, making money. It's the purchaser. After most purchasers, after, or the average purchaser, after they purchase a home, will on average spend about 30 grand on furniture upgrades, appliances. And so every time a transaction happens, it basically floods the economy with 30 grand being spent, which, so our overall economy is very much reliant on the housing market. Do you, I don't know if you know the exact figures on that.
No, no. So I don't know what the after spend, but 100% agree. The housing market, I mean, buying and selling houses, it's an American dream. We're different. Our economy has grown over the last 100 years because of the housing market. We're different than Europe. Think about Europe. Europe, you have family homes that have been lived in and passed down for hundreds of years because the population's been maxed out. In the US, we've always had land. We've had, the American dream, growing population, building houses, buying and selling them, living where you want to live, not necessarily where your family's been stuck forever. I don't want to say stuck, but has lived forever. Um, it is something that is a huge driver. I know, it gets a lot of play, within the administration that, hey, we got to get this thing unstuck and fast. And it is a huge driver of economic activity in the US. You're 100% right. And that number does not feel out of whack at all to me. 30 grand. Yeah, I can see it because I know when buyers talk to me, it's not, hey, how much cash can I lump down? It's how do I balance this? Because I know when I get into the house, I'm going to want to do some things. I want to make it my own, and to do that, we try to structure things so that you still have that cash flow available. Because yeah, that's the fun part about buying a house, right? Getting into it, making it yours, making it cool, and so that doesn't surprise me at all.
Yeah. I want to go back to Yun, who is again a chief economist for NAR, and he does have some positive predictions. He's forecasting 6% growth in existing home sales this year, and he does project the rates will settle around 6.4% by end of year. But that's only if Grob Joe or job growth and inflation stay down. Now, we think job growth and inflation will stay down. At least I do. So hopefully we will see that, 6.4 or low six by end of this year. And that could be that spark will ignite everything.
It is. And what really stinks about this whole thing. Okay, so this is the part that sucks, just being blamed, is what we're seeing is an economic slowdown, which unfortunately means job losses, right? So we're seeing at GM, right? We're all in Southeast Michigan. The big three are a big driver of jobs where they're just making, large cuts. And they're not the only automotive supply, field that it done. Clients I have, friends that I have in the industry are like, yeah, I'm scared for my job. And if you look at unemployment filings this week, they've been up 3 weeks in a row, week over week, month. More people are filing for unemployment. More people are staying on unemployment longer right now than what we've had in really since COVID. It's, unfortunately, the economy is going in the wrong direction. And, the good and bad, the crappy part for the economy, but the good part for the real estate industry is real estate generally goes the opposite. Like what happens is the economy slows down. To reignite it, we lower interest rates. And what's the biggest payment everyone has that yields interest rates? It's your mortgage, right? So now going out and buying a home is more affordable for the people who are employed, and so people take advantage of it and they move on it. It's the double-edged sword that we live in here in the real estate. You don't want to see anyone lose their job, but on the same token, um, it does seem to be a boom to the real estate industry when it happens.
Yeah. Yeah. So I think I just want to close it out with this. So to recap, we are officially in the stall out. We're in the stall out market. Inventory's up, sales are down, affordability is still wrecking the buyer's confidence. That is apparent, but it's also creating opportunity for those who move while everyone else hesitates or sits on their hands. So whether you're buying or selling, I mean, I think this is your window to act strategically, and not emotionally.
That's what Warren says: buy when everyone else is selling, man. Sell when everyone else is buying. That's the way you do it. That's the way the wizards work.
Right now is the era of opportunity.
Absolutely, absolutely. If you hear about it in the news, man, you're too late.
Yeah, absolutely. Thanks so much, Eric. We'll see you next Friday.
Yep.